I want to explain eXp Realty's revenue share explained correctly, because let me tell you, there's tons of changes. This is the 2024, 2025 version. So I want for you to be able to understand. Most people outside of eXp don't properly understand the entirety of this, and most people at the company don't even understand it. So I'm going to give you the proper explanation and also where people get it wrong. All right, so I'm going to overlay the screen so you can see the actual revenue share and how it works. I can also email this to you as well. Also, we'd love to have you have a private one-on-one call with me so you can understand how important it is to choose the right sponsor, because each sponsor offers different things. Some people don't offer anything, and some people offer massive value. So make sure you comment below and get exactly all the questions answered. As you can see, we have a 7-tier compensation plan. And this was actually modeled after Keller Williams, but there's a huge difference. We do revenue share, which revenue share is before expenses. They do profit share, which means it's after expenses. So right now they might have a ton of space that they're paying for, tons of salaries. They're only sharing a tiered system after they pay expenses, which is a major difference. We have a 7-tier structure, and you have expansion share, exponential share, and then you have what's called FLQA, or frontline qualifying agents. Now, it seems confusing, but you really need to understand this. All right, so now let's talk about the rev share program. Okay, so I'm going to explain this, and I'm telling you, every video I've watched has been totally wrong. And this is the only video I've seen that accurately explains how rev share works. Let me explain something on the first 3 tiers. There's expansion share and there's exponential share. So if you look at the first 3 levels, just to make it not confusing, I'm going to cross these off right here because the first 3 levels open up right away. You don't have to worry about expansion share versus exponential. So on the first level, no matter what, you make 17.5%. Now, if you look at this chart, you add the 1% plus the 19%, that gives you 20%. And then you add the 0.5 plus the 12, that gives you 12.5%. Again, the first 3 levels open up right away. When you add the expansion share and the exponential share, that gives you the total of what's in this 3rd column. You get 17.5, 20% on the 2nd level, and 12.5%. But here's the kicker. In your first year, you make 50% of revenue share pool in their first year with you. So let's do an example of a transaction that has $10,000. Let's pretend the agent's on an 80-20 split. The agent will get $8,000, eXp will get $2,000. Out of that $2,000, they split half the money to run the company. The other half they use for something called rev share pool. So in this example of a $10,000 commission, $1,000 goes to the rev share pool. So if this person's on your level 1, you would make $175. So if they did the full $16,000 cap for the whole year, that means the amount eXp is going to share in the rev pool is $8,000. So if I take $8,000 and I multiply it by 17.5, that gives me $1,400. So that's the most that you're getting on level 1. But here's the kicker. For your first year, instead of $1,400 and getting the 17.5%, that first year you make 50% of the rev share pool. So the rev share pool is $8,000. So in the first year you make $4,000. So in that transaction where I said the person does a $10,000 transaction, instead of getting $175, you're going to get $500 in their first year with you. Does that make sense? So if you follow it down the line, you'll see how much they get in tier 2, tier 3, tier 4. So if you're a capper, levels 4 and 5 open up right away. And if you're an icon agent, levels 6 and 7 open up right away. So remember, the other way that you can open up level 4, 5, 6, and 7 is by having enough FLQAs in your downline. So for level 4, if you look at it, if you're not a capper yourself, that's okay. All you need is 5 people in your front line, in your first tier, that has closed one transaction in the last 6 months at about $166,000 deal with a 3% commission. As long as they've had a commission that was a $5,000 gross commission, then they will be counted as an FLQA. So if you've got 5 of those people, then level 4 opens up. If you have 10 people, tier 5 opens up, and so forth. So that is super important in order for you to unlock 4 and 5 and 6 and 7. Here's one of the things that I absolutely love about EXP. And there's another huge company that's one of our competitors that if you don't sell houses yourself, you don't get to collect rev share. And that is really terrible because the whole point is you don't want to be able to have to sell houses for the rest of your life. You want to be able to have passive income and be able to retire. So that is really important. Also, if you retire or stop selling real estate, you can continue earning rev share even after you retire. That is one of the most important things. Plus, your revenue share income is willable. So that's really important. Now, I just want to explain the difference between expansion share and the exponential share. So remember, levels 1, 2, 3 open up right away. Expansion share is commission that you get all the way through the 7. Exponential share means once you get to levels 4 and 5, if you're not a capper or not an icon agent, you have to have a set number of frontline qualifying agents, the FLQA, to open up levels 4 and 5 and to open up levels 6 and 7. Also, something that's really important that people forget about is that in your very first year, they are actually doing something where you have a bonus that you get up to 50% more in bonuses your first year that you join. They really want you to attract agents your first year. And so you get a bonus of up to 50% more in bonuses for your rev share in your first year 1, which is really exciting as well. So let me break down the flow of money so you can see how this works. Agents are on an 80-20 commission split and they cap at a $16,000 cap. There is a $149 startup fee and an $85 a month cloud brokerage fee. Now, let's talk about teams. So domestic teams, it's $16,000. They share a cap. If you are a standard team, it's $8,000. In order to be a standard team, you have to have at least 30 transactions to maintain a reduced cap in a year. If you're a mega team, you have to have 120 transactions in a year to be considered a mega team. Then everyone underneath you is only $4,000. Now, let's talk about how you earn rewards. So with equity awards, $200 of EXPI stock for your first transaction. Then you get $400 of stock when an agent caps. And you get $400 of stock when you directly attract another agent. And as soon as that agent closes their first transaction, you also get the $400 of stock for directly attracting that agent. Also, you're welcome to voluntarily enroll to receive 5% of net commissions from closed transactions at a 5% discount. Okay, so for example, if out of your commission, 5% of your net commission, you can actually buy stock at a 5% discount. So also, if you are a top agent, you can get back $16,000 in stock when you are an icon agent. So the easiest way to describe an icon agent is if you cap and then sell another 20 homes. When you do that, that $16,000 that you give, you get $16,000 back in rewards. So what you're really paying if you subtract out all that stock you're getting is 0.